Welcome back to Midcap Radar. Well, one particular sector or segment of the market that's done very well, especially in the last year and a half, has been the realty pack. When you're looking at stock prices, number one, a lot of these stocks have given very significantly higher returns. Have a look at the one-year chart of names like, let's say, a DLF, an Oberoi Realty, a Godrej Properties. All of these stocks have given significant returns. In this context, and also in the context where we try and understand how exactly to look at prices, both on-ground prices for real estate in some of the top-tier cities, we have today Ghulam Zia of Knight Frank. They've come out with a very interesting report which reveals that Mumbai has recorded the second highest annual price growth in the world for prime residential properties in Q2 2024. Good afternoon, Ghulam. Thank you so much for joining us. First up, Mumbai, not very surprisingly, tops the chart as far as price increases are concerned. What's driving the significant increase as far as on-ground real estate prices are concerned? Is it demand or is it more of a lack of supply?
Well, to start with, let's look at this phenomenal increase, like 13% on a year is a huge number when we're talking about Mumbai, or even if it is Delhi, 10.5%. The reason, your question is about how do you justify this? Well, I would still not talk about lack of supply. I would rather talk about abundance of wealth creation. The ability of buyers to go out and buy these luxury properties is what is keeping the luxury market or the prime residential, not just in India, but all over the world, on the boil. Everybody is out there to buy. So net, the reason is simple. It's not so much of a lack of supply, but abundance of wealth, which is driving the prices so high.
Ghulam, you may complain all you want about the civic amenities that you get in the most of these metro cities, but prices are shooting through the roof. But as you mentioned in your survey as well, right, demand in the premium pricing category has been the one that has been driving this pricing growth. Do you see that trend of premium pricing continuing to drive sales going forward? And what is the pecking order in terms of driving sales, be it premium, then mid pricing, and then entry level? Or does entry level has seen some bit of improvement compared to when we last spoke?
Okay, let's put the picture straight here. The index that we are talking about is the prime property index alone. And in every of the 44 cities across the world that we map, we only take the luxury project in each of these cities and measure their performances. And the index that we're talking about is just that. Since your question is larger, you're talking about the whole market, mid and lower end. That is not a part of this study, but since the question is that how are they performing, let me tell you, there is not much of a growth in the lowest end of the market. In fact, lowest end, the affordable housing has been suffering consecutively for last 4 odd years. And that fatigue is unfortunately seemingly creeping into even the mid segment, which is worrisome. And let's also, since we're talking about the prime properties globally, let's also look at the last 1 quarter. The 13.5% or 10.5% that we're talking as far as Mumbai and Delhi, standing at place number 2 and 3 respectively, just after Manila, where it is 26%. That also, if you look at only the last quarter, not just in Mumbai, Delhi, but all over the world, last quarter has been a drag. It's been very low. I think 2.5 to 2.3% is roughly the growth all over of those 44 cities. And that even Mumbai and Delhi are also not different. Like Mumbai has seen barely 2.6% growth in last quarter. If you compare it with the annual growth of 13.5%, that means there is a slowdown. On the other side, Delhi is at 0.1%, Bangalore at negative 0.1% the last quarter, which is showing that even the super luxury, the upper end, the uber prime properties are also showing some drags, some amount of fatigue is coming in. But definitely to close, the lowest end is in not really improving at all. The mid end is also showing sign of fatigue. That is a big concern.
Ghulam, very, very interesting point that you've put out there. Mumbai ranks 2, Delhi ranks 3, Bangalore ranks 15th on this particular index that you're talking about. So the premium end of the market doing quite well. Some amount of exhaustion is what you've seen in the last month. Now, give us a sense of, especially if we were to forecast demand going forward, in the backdrop of likely rate cuts, how exactly do you see demand panning out? Is it elastic or is it largely inelastic, especially in the premium end of the market?
Well, at least the premium end is still not showing any sign of reduction in velocity of sales or number of transactions that are transpiring month on month for last almost about 2.5, 3 odd years. And that is something which is giving us a little confidence that even in short term, we don't really expect this to turn so drastically so soon. As I said, even the mid-term market, the mid-end market was also doing exceedingly well for same kind of period, but right now showing some fatigue, signs of fatigue. But as far as super luxury, the upper end of the market is concerned, the number of transactions that we see in, say, Mumbai or a few projects in Delhi, Gurugram, or Bengaluru, these are locations where the transactions in the upper end of the market is still not showing any signs of reduction. So that gives us comfort to say that if I have to talk about some amount of crystal ball gazing, at least next quarter or two at least, the upper end of the market is not going to be changing so drastically. Mid-end point of concern arising, lower end continues to be a big concern. And as you rightly said, the reason is simple. The central banks have to now, if at all real estate is their priority, they have to consider rate cuts now. Otherwise, it will be reflecting on real estate sector as well.
You spoke of exhaustion, Gulam, and I wanted to ask you this, that you mentioned for a quarter or two at least the premium market will continue to grow the way it is, even if there is a slight slowdown. But there will come a point, right, if the prices keep going up the way they are, that there will be buyers who would put their hand up and say, okay, even if we are capable of buying this, we are not going to buy it because the prices are just too high. And even if there are divergent opinions on this, but still for most Indians, real estate is still considered an investment opportunity and not just something that you reside in and things like that. So do you see that bit of exhaustion or a bit of a decline coming into the premium end of the market? Because the lower end is already suffering, but do you see that happening in the premium end as well if prices keep going up?
Well, price continuously going up will definitely be a problem. Whether it is taken as an investment class or not, that the point have gone beyond anybody's comprehension will be a pain point, and which is true for the whole market, not just the premium segment, but mid to lower end. Of course, the lowest end is the most susceptible to a price rise continuously seen. In fact, that's where the price rise is not as much. In the upper end, the price rise is high. Let me also bring in another aspect that as far as upper end is concerned, the buying of property is not so much to do with investment as well as return on investment, as well as the investment of passion. So when you're buying an absolute upper end property, like for example, if you're buying something in Gurgaon, these days it's showing a lot of such projects where more than 100,000 rupees a square feet product you're buying, or in Mumbai where it is 150,000 rupees a product, a square feet of product, you're obviously not expecting these prices to double up in next 4 to 5 years or even 10 years. So the rate growth in the upper end of the market is not expected to be that high. But you're right that if the prices continue to rise as much as they are, say 13.5% that we saw in last 1 year in Mumbai, it's a big sign of concern.
Gulam, thank you so much for joining us, and thank you so much, for helping us break down and understand what exactly is going up, especially in the upper end or in the premium end as far as the real estate market is concerned. Let's now slip into a short break. We'll get you more on the markets and stock specific action on the other side. Stay tuned.